The Scotia Investments webinar series is our flagship economic and finance forum where we seek to bring timely and relevant information to our clients and stakeholders. Today's discussion comes at a time when the country is about to debate the 2011-2012 budget. The estimates of expenditure were tabled last week, and very soon we will hear from the Finance Minister how the country will finance the proposed expenditure. One thing is clear: the pace of revenue growth is slowing, and the days of tinkering with taxation policy to squeeze even more revenue are drawing to a close. At the start of fiscal year 2010-2011, the Scotia Investments research team indicated to the market that we expect the government to meet its revenue target. Although the final numbers for 2010-2011 have not been presented, we maintain our view that actual revenues will trail budget. Given this background, any credible medium-term economic program must be hinged on a credible growth strategy. It's against this background that we have put together a distinguished panel to discuss strategies that we as a country can pursue to improve the poor economic performance that we have seen for the last 35 years or more. The panel has been carefully selected. Each member comes from a particular vantage point that gives a bird's eye view on the economy. Therefore, the panelists have a good understanding of what is required to move the country forward. The panelists comprise of Mr. Bruce Bowen, President and Chief Executive Officer of Scotia Group Jamaica, Dr. Damien King, Head of the Department of Economics, UWI Mona, Mr. Milton Samuda, President of the Jamaica Chamber of Commerce, and will be joined later on by Mr. Vitus Evans, President of the Jamaica Exporters Association. The flow of today's proceedings will see each panelist having up to 15 minutes to give their opening remarks. Once the panelists have given their initial views, we will then move to the discussion segment. Questions will be taken from the live audience and from our listeners on the internet. I will now move to ask Mr. Bruce Bowen to give his opening address.
Thank you, Adrian. Certainly this discussion is a timely one. To put into some context, it's hard to believe it was just 12 months ago that we were waiting for an IMF agreement. We were through the process of looking at the JDX, and I think if we're honest, many of us would be surprised we'd be sitting here with the level of stability that we've seen in the financial markets. However, as was recognized at the time, it was a prescription for stability, not one for growth, and now our challenge as a country is to develop that path. And if you look at Jamaica's economic problems, they're well documented. Different international organizations have identified different things. Clearly the high debt burden, bureaucracy in the government has talked about energy costs are talked about. Access to capital, we talk about labor productivity and the need for reform in the tax system. From our perspective, the critical ingredients, there's 3 or 4 of them. First of all, we need to maintain the fiscal discipline. While there were many things that have led to the position we're in with very stagnant growth, clearly the fact that the government was crowding out the private sector by lack of discipline in the budgets was a key ingredient in pushing rates up and ensuring or prohibiting capital from going to the private sector. I believe a good start has been made in reversing a period of continued growth in expenses, and we've seen some very tough decisions being made. But we're only after 12 months, and our challenge is going to be ensuring that discipline continues. We need to ensure that the primary surplus continues to grow. We need to be seeing debt to GDP reducing, and money needs to be prudently going to stimulate the economy. Now, prescription is very, very difficult. It's going to require ensuring that government becomes more efficient so that recurrent expenditures, the growth in them, have slowed down. I am looking forward to to an update on the public sector transformation project and what's going to come out of that. So maintaining fiscal discipline is going to be critical. The other thing is labor productivity, and that ties to education, skills training. Again, World Bank studies showing that Jamaica has had declining labor productivity over the last 10 to 15 years. And it's also well proven around the world, studies have shown that in order to become a developed nation, in order to become successful and grow your economy, there needs to be investment in education. You need an educated and productive workforce. Again, a challenge in a time of fiscal discipline, but it's important that those investments be going into education, and both the government and the private sector investing in training and development of our people. In my view, there needs to be a clear and actionable strategy on foreign direct investment as well. The strategy needs to be there, but it needs to be backed up by specific plans of how, as a country, we're going to ensure that the infrastructure is there to attract the industries that we're strategically going after. And then there needs to be a very focused investment promotion strategy. And again, the government can't do that alone. All sectors need to be helping, and private sector has a role to play both in building that foundation for foreign investment and in assisting with its promotion. Let me finally turn to the financial sector, because clearly we do have a role to play. We have maintained a position of leading the market down in rates, keeping our rates lower than the competition. Clearly, a lot of pressure that they're not coming down quickly enough, and that's a separate discussion to get into. But clearly there is a role we have to play, and we've been trying to play that role. We've been investing in our small and medium-sized business lending networks, investing in our people and systems to make that process more efficient. But there's still things that can be done in that area. I believe the capital markets need to develop more so that there are more than just loan as a product for people to gain access to financing. And that's going to require things like looking at the transfer tax, the stamp duty on corporate bonds, continuing to look at mutual fund unit trust legislation so that the pools of capital are there in order to invest in corporate bonds and other securities. And we need flexibility in what the financial sector can be investing in, particularly brokers and insurance companies, to ensure again that there's demand for non-traditional or more developed forms of corporate financing. I think in the financial sector we should be looking at the reserve ratios for the banks. It is a hidden cost of funds that drive spread. There are clearly a lot of issues Bank of Jamaica needs to look at. It's not as simple as just reducing them, but we need to be evaluating the need for the current level of reserves, and is the efficiency in the financial system sufficient benefit to warrant reduction in them. And finally, an issue that's been under a lot of discussion is loan portability. We do believe that making it less expensive for people to take loans and to transfer those loans is good for the economy, and something that we certainly would support. In summary, I am optimistic. I think we've accomplished a lot in the first 12 months. I think we're starting to see a return to confidence. I think a lot of the ingredients are there, but we need to have all sectors in the economy working together to put together and execute on a growth strategy. And I think if we do that, we'll see great success.
All right. Thank you very much, Bruce.